This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
I'm Paul Sweeney. Alex Steele is out this week. On today's Bloomberg Intelligence Show, we dig inside the big business stories impacting Wall Street and the global markets. Each and every week, we provide in-depth research and data on some of the 2,000 companies and 130 industries our analysts cover worldwide. Today, we'll look at the fragility of the commercial mortgage-backed securities market, as well as the impact that business leaders can make by advocating for safe and secure elections. Plus, with the U.S. election just a few days away, a look at the sway U.S. presidents have on fuel economy standards for cars. But first, tech earnings. This week, Alphabet reported earnings that surpassed analyst estimates, with their cloud division seeing a 35% rise in sales, while Meta warned of a worsening AI losses. Bloomberg Intelligence Senior Tech Analyst Mandeep Singh breaks down the reports.
Search, Cloud, YouTube, these are three separate businesses doing extremely well at scale. I mean, double-digit growth for search business is really stellar when you think of all the pressure they've been facing, when it comes to new entrants like ChatGPT and Perplexity and whatnot. And everyone is of the belief that they would take at least some share from Google, at least in terms of ad revenue. Google hasn't lost any share. In fact, it's a very healthy growth at their scale. And YouTube, look, 50 billion plus revenue run rate, wow. 70-30 split between subscriptions. Ads is 70 and 30% is subscriptions, and subscriptions grew 28%. I mean, just think about $15 billion subscriptions business growing 28%. That's very impressive. So, and we're not even talking about Waymo here. So when you look at, all the businesses, they clearly have a lot going on, and Waymo is a future bet, but something that could be huge in terms of, top line.
What's interesting, you just mentioned $50 billion of run rate revenue for YouTube, and advertising subscription. That sounds a lot like the cable television business, the cable right. network business. I look at Paramount Global, all those cable networks, they have $30 billion of revenue. Oof. So YouTube is significantly bigger than some of the largest advertising and subscription-driven media companies out there. In a dozen years. It's just extraordinary.
And Mandeep, you were talking about these massive investments that Google and Alphabet, obviously the parent company, has been trying to catch up to the likes of obviously Microsoft and of course OpenAI. Walk us through some of those investments and how they're starting to pay off.
I mean, look, in the case of Alphabet, they have huge data center investments simply because they have a giant infrastructure that's powering, these big businesses. So there's a lot of internal consumption of these chips, but also the cloud business, which saw a nice acceleration, sequential acceleration from 29% growth to 35% growth. I would say a lot of that is driven by the availability of GPUs in their cloud. So I would be interested in seeing how much of Microsoft GPUs are being used for internal consumption versus what is being exposed on their Azure cloud. Because in my mind, Google having their own chips is making a difference in terms of their cloud growth. With Microsoft, at least they quantified the AI services contribution being $10 billion by next quarter. So that's huge. Still, when it comes to Azure, the fact that growth is not accelerating like we saw with Google Cloud, it makes you wonder, if CapEx is growing 50%, why is it not translating into faster Azure growth? Even though 33% is a very solid number, but you want to see that acceleration, which we saw with Google. In the case of Meta and Microsoft, the expectations were higher, and I would say Meta is somewhat different in the sense that they have their own large language model. They have their lead when it comes to, generative AI, but they don't have a separate AI revenue line like you see with, Microsoft or with Alphabet. And that's where, if they say, CapEx is going to significantly increase for 2025, without really quantifying how significant it will be, whether it's going to be 20%, which is the consensus number, or 30% or 50%. Nobody knows. And that's what I think created that uncertainty around Meta's CapEx spend. And we saw what happened in 3Q of 2022, where they had a very similar print, but they actually quantified that significant. And, the stock dropped 20% after that. So clearly there is some nervousness and uncertainty around their CapEx spend.
How is AI impacting John Tucker, Jess Men's search results
Right.
these days?
I mean, just the nature of search is changing in the sense you can ask, a lot longer queries. The prompts can be infinite in length. You can, have a video or an image prompt. It just doesn't have to be text. So that's what Google called out, that the queries are getting a lot more complex in nature, and users are actually engaging with it. So it's not as if, that's driving them to some other platform. Users want to use what they call multimodal search, which is a combination of text, videos, and images and audios. So that's why these LLMs are so powerful, because they give you that innate capability to search in whatever format you want, and you can just throw it in that search box. So that search box is getting a lot bigger and a lot more complex on that Google page.
Our thanks to Bloomberg Intelligence Senior Tech Analyst Mandeep Singh. Sticking with earnings, Eli Lilly lowered its guidance due to lackluster sales of its weight loss drug Zepbound and diabetes drug Mounjaro. Each missed estimates by nearly $900 million. For more on the drug maker's shocking results, we were joined by Bloomberg Intelligence Director of Research for Global Industries and Senior Pharmaceutical Analyst Sam Fazeli.
When they reported, we got a miss, right? And I'm looking at it right now. They missed by 6% on revenue. That is not what you do when you're a 60 PE company, right? The world's not forgiving enough on that. And just breaking that down further, the miss was two drugs, Mounjaro and Zepbound. And those are the drugs that everybody talks about. This is the obesity drugs that are on the market. They missed. Why did they miss? The company said that it's because there was an inventory destocking going on at some wholesalers. So people go, wait a minute. You're saying to me that demand cannot be satisfied. We're supply limited. So why is there an inventory issue in the middle here? And of course, that's what led to the question of, oh my God, are we overestimating demand here? Is the company overestimating demand? Is the world overestimating demand? It sounds like with the 12 different forms of the drug that they have, that no one in this early launch phase, we can call it early launch, right, given that it's been a couple of years, is really able to manage and work out what they need to have as inventory, because in such a massive product, you're going to have an impact on working capital, even for the wholesalers. It sounds like that's the issue, that even Lilly themselves can't necessarily forecast here, right? I mean, the actual details of how much of each product they have to make. If that's true, then, and I think you get a little whiff of that in the fact that full year guidance wasn't dropped by as much as the miss, that at least currently they are optimistic about picking a whole bunch of that back up in the Q4, that we should not worry about demand. You talk to any doctor you want. Do they say, oh, I have no patients left to asking me for Zepbound or Wegovy or whatever? So I think that's what's happening here. The difficulty in managing and thinking about how to manage your inventory.
Something I wanted to pick your brain about was when it comes to knockoffs, because we saw a huge drop in Hims and Hers earlier this month. So they previously were allowed to manufacture copycat drugs when they're deemed in short supply by the FDA. But the FDA at that time said when it came to Zepbound and Mounjaro, specifically for Eli Lilly, they weren't shortage anymore. So that's why you saw that drop there. But they still, when it came to Ozempic and Wegovy, when you think about Novo Nordisk, they were still able to offer compounded versions of those. So I'm wondering, when you think about Eli Lilly versus what's happening with Novo Nordisk, how does that kind of come into play when you're thinking about when it comes to sort of the knockoffs and the copycat type drugs?
Yeah, sure. I mean, I'm not even sure that people have stopped making compounded versions of Zepbound and Mounjaro, because the FDA kind of reeled back a little bit. and said, oh, we're going to actually look at this again. So I don't think that story is finished. I think that some folks are still able to supply those from a compounded pharmacy perspective. So, that's a law, that's a route that the FDA does provide to people. If there's a shortage of a drug and someone else can make it, well, let them do it. The interesting angle, of course, is that a whole bunch of people who are taking off the compounded pharmacists are probably paying less. And therefore, if they're forced to go and take it from a prescription, they may have to pay more out of pocket. So that's not going to be leaving a particularly good taste in folks' mouths once that this actually happens. But it hasn't happened yet. So, and they did say on the call that this is not because there's enormous demand being fulfilled by compounded pharmacies. It's literally to do with that inventory management issue.
What are the companies saying, Sam, about getting this in an oral format? I think that might be one of the next big, I guess, mileposts for this type of treatment.
Yeah, I remember, Paul, there's already an oral form of this. It's called Rybelsus. It's from Novo Nordisk. It's just a tough drug to use because you have to have it within about half an hour of eating. You can't take it too close or too far from an eating because you need an empty stomach before you take the drug. And it's a big dose, and maybe the side effect profile isn't as great, and the weight loss isn't as great. So people are trying to develop oral versions of these drugs, but also oral drugs that are like normal drugs, small molecules that they can swallow as a pill once a day. So that's coming.
So what do you think shareholders need to watch for next when it comes to, especially after its outlook disappointed?
I think we need to see how Q4 does. So let's hope that their current guidance, at least they meet it, maybe beat it. That would be nice. The issue is then we move into Q4. There's an interesting result from a clinical trial that's coming up. They've done this before. They're comparing Zepbound with Wegovy, and I suspect that they're hoping, and that data suggests that they will show that it has better weight loss. Whether the side effect profile will be better or different, time will tell. But there are not many pharma companies do these type of head-to-head trials because that takes some. Yeah, no, I just wanted to get real quick. What's the latest thinking on the size of this market? I know you guys have done a lot of work on this. Oh, yeah, I think Mikey's latest numbers are at 93 billion. Wow. I don't remember exactly. Okay. It's big. Yeah. Well, out of nothing, exactly.
Our thanks to Bloomberg Intelligence Director of Research for Global Industries and Senior Pharmaceutical Analyst Sam Fazeli. Coming up on the program, the next U.S. president will wield major power in shaping the future of electric vehicles. We'll find out in which direction each candidate wants to go. You're listening to Bloomberg Intelligence on Bloomberg Radio, providing in-depth research and data on 2,000 companies and 130 industries. You can access Bloomberg Intelligence via BI Go on the terminal. I'm Paul Sweeney, and this is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
I'm Paul Sweeney. Alex Steele is out this week. Each week, we look at research from Bloomberg NEF, previously known as New Energy Finance. They're the team at Bloomberg that tracks and analyzes the energy transition from commodities to power, transport, industries, buildings, and agricultural sectors. This week, we took a look at the overall EV market and the sway U.S. presidents have on fuel economy standards for cars. For more, guest host Bailey Lipschultz and I were joined by Corey Cantor, BNEF lead U.S. electric vehicle analyst. We first asked Corey, how would the EV market change under each presidential candidate?
Everything from federal fuel economy standards, that's the kind of miles per gallon of new vehicles, which electric vehicles help automakers achieve, to the implementation of the Inflation Reduction Act. So even though the law was passed now over 2 years ago, you're going to see those loans and grants from the federal government impacted, all the way up to the $7,500 clean car EV tax credit that people know and love in some cases. So depending on who wins, obviously with the IRA, you're going to need Congress's input on that, but there are things that a Trump administration could do very early on the implementation side to make those credits a bit more restrictive. So it's going to be big, but also a split decision could have an impact too if you have, say, a Republican Congress with Kamala Harris as president or vice versa.
And how does that actually impact the ability for these car makers to sell cars? When I look at targets of Biden administration having a certain number of EVs, I'm from California, where they lay out these overly ambitious goals 5, 6, 7 years down the road and then seemingly chop them down when they get closer.
Yeah, Bailey, I mean, even beyond that, there's been a kind of back and forth between California and the rest of the country for a long time, known as, the California Advanced Clean Cars 2 policy, which aims to have 100% of all new sales by 2035 as electric, 80% fully electric, 20% plug-in hybrid. And so last time Trump was elected, there was a lot of lawsuits, a lot of uncertainty in the market. It makes it very difficult from an automaker perspective to actually plan. And so these automakers for a long time have wanted both the carrots, which are these IRA kind of subsidies and incentives on grants and loans, and then they'd be willing to take the stick, which is the fuel economy standards. So we have to see how it shapes out, but from the automakers that we speak to, it's a pretty confusing policy environment. But given that the globe is moving towards electric vehicles and cleaner cars in general, they have to kind of prepare to move that way regardless, and it's just how quickly in the US are they going to move in that direction.
The Chinese are moving very aggressively. How do you expect them to do outside of China? Will there be market for Chinese EVs in Europe, in the US?
Yeah, it's a really good question, Paul. And looking at the data which we do at BNEF, you can see Chinese automakers like BYD making up ground in places like Brazil, in places like Latin America, in places like Israel, where you might not expect to see Chinese automakers. They've been moving into Europe, and there's been a pushback with all the tariffs and back and forth there. I think that's also why the U.S. election does have a big impact, because if there's no kind of countervailing force coming out of the U.S., you see what's going on with Volkswagen on the European side, it's going to maybe make the road easier for those Chinese automakers on electric to kind of shift into those export markets, because if Tesla isn't focused on making more affordable EVs, then there's really only going to be one major player in town. It doesn't mean, that Chinese automakers are going to be the only ones who are making mass EVs, but it's a pretty big transformation at the global auto market level, just like when the Japanese automakers came onto the scene. So I think that's the way I like to think about it. It doesn't mean that, EVs are going to be sold everywhere overnight, but without a kind of other major automaker, that's where I think a lot of these countries are going to turn.
And if we do see tariffs on some magnitude, what does that actually mean for the market, for Elon Musk's Tesla, who he's had a very prominent role campaigning for Donald Trump, as well as other companies?
I think when it comes to U.S. tariffs, that could buy you, I think, some time. You look at the 100% tariff that the Biden administration put on Chinese EV makers. Well, there weren't that many Chinese EV makers selling electric vehicles here currently. Geely Group, which owns Volvo and Polestar, was pretty much the major automaker impacted. So that's why you saw those prices, or the Volvo EX30, which is a really popular model globally, not sold here yet. It's keeping BYD out for a little bit longer, but if the automakers like GM or Stellantis or Ford aren't helped or don't move towards electric vehicles, maybe it buys you 2, 3, 4 years. But all the while, BYD and other Chinese automakers are making more investments in battery technology. And I think regardless of who wins, you need to see more of those investments here on batteries, because those are going to be important not only for electric vehicles, but for the grid as well. And you're letting China get a major competitive advantage.
What are the U.S. manufacturers doing? Have they pulled back on their EV investments?
We've definitely seen at a global level those EV targets moving back. I think Ford in particular, you saw them move their new EV models out a couple years. So it's less so on the dollar amount and more pushing it back. GM has seen better EV sales. In fact, their third quarter this year was the best in the U.S. that they had seen to date, with the Equinox and Blazer and Lyriq really taking off. To make one bright point, Bailey, your home state of California actually saw in that third quarter the best EV share of sales they've ever had at 27%. So that's 23%, about almost 24% fully electric, the rest plug-in hybrid.
Wow, so that's pretty good. What's the U.S. average?
U.S. average has been at about 10% now, 9.5%, 10%.
You guys are just far ahead.
California twice the average. But what's significant about that is California had been stuck at about 25%. Tesla actually for 4 quarters in a row in California has seen decline in deliveries because of, I think, some of the kind of Tesla or Musk fatigue. And so to see California begin to grow again from the other automakers, even as Tesla's pullback, is pretty significant.
We stick with the automotive space. First, Chinese carmaker BYD notched up another win over Tesla this week, reporting quarterly revenue that beat Tesla for the first time since the pair have gone head-to-head in global electric vehicle sales. while Volkswagen announced a cost-saving proposal to keep its German plants open after announcing plans earlier in the week to close at least 3 factories in Germany and eliminate thousands of jobs amid struggles with poor demand in Europe and intensifying competition in China. For more, Norma Linda and I spoke with Bloomberg Intelligence Senior Auto Analyst Steve Mann.
BYD is on a roll. The whole EV market in China is on a roll. It's displacing, ICE vehicles, internal combustion engine vehicles, and it's growing, double digits. What BYD eclipsing Tesla's revenues, that's not the end of it. I think the Chinese automakers have a really long-term goal to really expand globally beyond their borders. Look, the Japanese are really good at controlling costs in making cars. The Western automakers basically develop the current, automotive market around the world. So China wants to have a stake, have a claim in the automotive industry, and EV is the way to go. And they want to sell everyone they can build, not only locally but internationally.
So, we know that Tesla has really been in focus this year as we've been seeing shares dipping into the red and then back into the green. I'm looking at the company up about 1.2% this year. But then when I'm looking at BYD, we're seeing shares up 31% this year. So when you're looking at the comparison, it's definitely very drastic. What is keeping these U.S. EV makers behind? Is it appetite from consumers? What exactly is the drag here?
That's a great question. I think the Chinese automakers know their consumers a lot better than the Western automakers. Chinese automakers, Chinese industry, auto industry has about 200 EV models for the mass market. It's a lot more than what you find in the U.S. You can probably count them with your fingers in the U.S. in terms of number of models under $50,000. So the Chinese automakers know the Chinese consumer. They want cheaper EVs. They want cool user interface, high tech user interface, and the Chinese automakers are able to deliver those what the consumer wants over there.
So, talk to us about just the rest of the world in EV consumption here, Steve, because I think it differs around the world. It feels like it's much weaker than expected here in the U.S., but other parts of the world, adoption's much better. How did the companies think about it?
There's a few things that's actually are hurdles for EV adoption, especially in the Western hemisphere, Western world. It's really the infrastructure. It's really the affordability of the vehicles. Charging infrastructure is only in the U.S. It's only a fraction of what it is in China. And again, EV models. I think EV models are lacking. Especially the ones under 50,000. But if you look into 2026 and 2027, there's going to be a whole slew of cheaper EV models from GM, from Ford. Volkswagen's thinking about launching the ID.2, which is under 30,000. Stellantis is doing the same thing, working with the Chinese partner, Leap Motor. So I don't want to write off the EV market, especially in the West, just yet. I think there are hurdles to work through. The automakers are doing that. They're expanding their supply chain to make sure they're able to build these vehicles as cheap as possible and more affordable for the mass market, the general consumer.
So when we're thinking about EV companies here in the U.S., my main curiosity when I think about switching to an EV car myself, and I want to do that, is there enough infrastructure to support this transition? Of course, regionally, maybe if you think about California, they're going to have charging stations everywhere. But it's also part of the concern is the consumer wondering whether or not they're going to be able to find a charging station as quickly as they can find a gas station. Have there been developments there?
No, there is development. There's a lot of charging stations going up, but we're nowhere near what we need. Like if you look at, again, comparing China and the U.S., U.S. only, and the number of charging stations in the U.S. is only 10%, 15% of what China has. So there's still a lot more to go. There's the Infrastructure Act that's put in place to help that. but I think there needs to be more private investments. A lot of the consumers today that own EVs have to install chargers at home just so that they can charge, not rely on the public infrastructure.
Our thanks to Bloomberg Intelligence Senior Auto Analyst Steve Mann. Coming up on the program, we explore the fragility of the commercial mortgage-backed securities market. You're listening to Bloomberg Intelligence on Bloomberg Radio, providing in-depth research and data on 2,000 companies in 130 industries. You can access Bloomberg Intelligence via BI Go on the terminal. I'm Paul Sweeney. It's 30 minutes past the hour. This is Bloomberg.
You're listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
I'm Paul Sweeney. Alex Steele is off this week. For the first time since the great financial crisis, buyers of top-rated commercial mortgage-backed securities are suffering losses. And within this market, the pain is most acute in a new breed of bonds known as single asset, single borrowers, or SASBs. For more, guest host Jess Metton and I were joined by Carmen Arroyo, Bloomberg News credit reporter.
In May, we saw the first AAA bond, commercial mortgage AAA bond being hit, backed by a single office property. And then we started digging into basically the data to see what other buildings could get hit. And the result is there's a few. A ton of the office properties across the U.S. have been distressed for years. It just takes a long time for that to reach bondholders. And now it's starting to get there. So we kind of analyzed the data. We saw at least 12 other buildings are said to have some type of loss. Some will be at the AAA level. Some will be just the investment grade portion. But there's definitely a lot of more pain to come.
Which regions across the U.S. are most vulnerable?
It's all over the U.S. actually. We saw there's buildings in New York, of course, Chicago, L.A., San Francisco, but there's also buildings in Kansas City. It's kind of everywhere.
But if I'm holding a AAA bond, I expect to get paid back here. So what's happening to these bonds? Are they coming up for maturity and then the owner has to refinance the bond, or how's this all playing out?
Sure. So every AAA bond holder thinks they're going to get paid back.
Exactly.
That's why you buy it. But they a lot of these buildings have not been receiving interest on the bonds for a while. And the minute the appraisals drop and kind of the owners of the buildings get rid of them or sell them, the losses are realized. And the gist of it is that the buildings are worth a fraction of what they were worth a few years ago. So there's just not enough money to pay back everyone, not even the AAA holders. And that's the whole issue. The real estate is just not worth it.
When you're speaking to AAA bondholders, what are they telling you as far as why they might still be holding on to that? What's the risk reward?
A lot of the AAA bondholders will get some money back, the lower tranches won't. And I'm not sure if there's a market for that type of, those type of bonds at the bid they may want them.
And I'm looking at, you have a big take story, which means it has great graphics in addition to being well reported, well sourced. Some of these buildings, New York, Chicago, LA, West, 555 West 5th Street, 725 South Figueroa, I know that building. But these things are being valued at significant discounts, right? And some not even covering the amount of the outstanding loan. Yeah. So that's where the problems come in.
Yeah, that's the problem. And it's also a lot of these buildings depend on one single tenant. So the minute that tenant's look, my lease is up, I'm leaving, I want a newer office, this building is really old, the bonds just drop in price because that's where they're getting the income.
I think anytime it comes to anything revolving around real estate, as we know very well, people want to harken back to the global financial crisis in 2008, but this is a very different situation, especially coming out of the pandemic. And talk to us more about how this is a very small subset of the bond market when you're looking at this.
Yes, definitely. there's definitely some type of echo to the, similar to the financial crisis in the sense that you don't see losses on the principal level in AAA bonds. That hasn't happened since 2008. Mm-hmm. But again, it's just a few bonds within the commercial mortgage-backed securities market.
Right. So when you're speaking with your sources, what are the risks of other broader ripple effects or any sort of other red flags potentially brewing? And then maybe the offside of that where there's more optimism of what could happen?
Yeah, I think the risk is mainly for any building that's old and that the tenants are walking, there's going to be issues. But if any new building that has a great reputation, has a lot of tenants, there's that market is kind of booming. Right now in new issue markets, buyers are just gobbling up the debt. So it really depends on the building.
Carmen, is there any sense from your reporting that the office real estate market is at or near a bottom, or is anybody calling that, or too early?
Yeah, a lot of people are calling that. Like when we start to see the office buildings get sold, that's where we've reached the bottom, and then everything is going to go up.
Is there a timeline as far as how long that could take?
Yeah, it can take a long time because like the leases are so long that tenants may be locked in for like years. But most people are saying it's between now and the next few months.
Thanks to Bloomberg Credit Reporter Carmen Arroyo. Next, we look at bank earnings. UBS posted third quarter profits that almost doubled expectations, adding to evidence that the bank's integration of Credit Suisse is on track. For more, guest Alison Williams, Bloomberg Intelligence Senior Analyst, Global Banks Asset Managers, breaks down the reports.
So a really strong quarter. Fundamentals look good. I think there are some concerns about capital, but people look at their business. 60% growth in their Americas trading business. So wow is the word. Yep. It was a record third quarter trading for them. Keep in mind that third quarter tends to be weak. So, but it was the strongest third quarter they've ever had. And that was really due to cash, equities, and derivatives, strengths of the bank. So 27% growth, really looking good, and a lot of momentum coming into the fourth quarter. The other positive for UBS, that core wealth franchise is really what sets them apart. And they did have very strong inflows across all the regions, especially Asia. So that's also very good. And then on the deal execution side, we also like what we're seeing there in terms of the cost progress. The gross cost saves are over 50%. The way there. So that's a positive. The non-core unit, so that's, stuff they want to get rid of. They're making cuts there faster than expected. But capital, as I said, that was the one thing I think, investors are still a little bit skittish on. They did actually take a cut to their capital ratio in the quarter, basically because they voluntarily are kind of giving up some accounting relief. So I think that's accounting is sort of just noise in my view. But they did say that, they're not sure if when they report the fourth quarter in February, if they're going to be able to give guidance on buybacks. And that's because, while they're executing on this deal fundamentally, regulators, are concerned about the size, and they may force them to hold more capital.
How representative is UBS of kind of some of the other European banks, Alison?
So it's interesting that, UBS versus the other banks, they are more skewed to the equities business. They do have a very strong U.S. presence, as you said. They also tend to be strong in Asia, and we really saw a lot of strength there late quarter that benefited, the companies such as J.P. Morgan and Morgan Stanley. Deutsche Bank does not have the equities business, but they were very strong in FICC. But generally, we did hear about strength across regions, across cash and derivatives is a strength for those two French banks.
We wrap up the show by looking ahead towards the U.S. presidential elections, specifically the impact that business leaders can make by advocating for safe and secure elections. For more, Billy Lipschultz and I spoke with Rhett Buttle, CEO of Public-Private Strategies.
So first of all, America, as we know, over the last, set of election cycles has primarily had very safe and secure elections. And I think we're feeling confident about all of the elections to date. And many of the, state and local officials have worked very hard to prepare. I think, one of the bigger questions is, we probably will not have the exact results of the election on election night. And so, it might be until Saturday or Sunday until we know an official winner. And so one of the pieces that we've been thinking a lot about is really making sure that folks are preparing for that they know that every vote is still being counted, and that the process might just take a while, but that is the important role of democracy, making sure every vote gets counted. And particularly for business owners, understanding that this sort of period of uncertainty is a really important moment for businesses to be able to, bring some calm to the market, to be able to say this is how democracy plays out, not just in the role that they play in the markets, but also in the role that they play as community leaders. For a lot of CEOs who have employees, this can be a fraught time, for example. And so it's really important to know that, every vote will be counted. The elections are on par to be very safe and secure, but we may have a period of uncertainty, and that's okay. And we just need to understand that might be the case, but it's an important part of letting democracy play out.
Well, Rhett, I think back to 2020 when it took a few days, but we were still in the midst of the pandemic. Now in 2024, people will be back into the office, back at work, back on subways here in New York and commuting around the country. How does that actually kind of impact a delayed ruling or a delayed decision on who in fact will win the election, especially as we see a number of contested seats across the House and Senate?
Yeah, look, we're so used to having everything, be so instantaneous. We're used to obviously having a result, called on election night. The reality is, at least for the national presidential election, we expect it to be very close. And there's a number of states that probably will take a few days to make sure that every ballot is counted. And so, unlike where we were all sort of huddled in our homes around Zoom screens or around TV screens before, we are going to have people going back into the office. And we know one of the things we learned in 2016 was that, elections can invoke a lot of emotions with employees and start a lot of conversation. And the reality is the workplace has become a really important square for civic engagement, right? It's one of the places where people interact, they talk to each other. And so it's become increasingly important that business leaders and CEOs think about the role they can play in sort of setting the tone, the role that they can play in sort of depoliticizing things and making sure that there's a safe space. We see in a lot of companies with employee research groups that there's the opportunity to provide space for dialogue. And so part of the work that we've been doing under an initiative we created, it's called the Business and Democracy Initiative, is we've been working with business leaders to help them prepare for this election, to not only sort of raise their voice in their communities, to talk about how this is the normal part of democracy, but also to play an important role in sort of depolarizing, de-escalating, and making sure that everyone's voices are heard in this process over the next few weeks.
Rhett, and the business leaders that you do speak to, what is the concern level, if at all, that we have a recreation of something like January 6th to that level?
Look, I think overall people feel that the election is going to be safe and secure and that every vote is counted. So that is a good point. I think generally what I hear from business leaders is, increasingly, risk has become an issue with just instability. And so even beyond the elections, there's a broader issue with the government, for example, not being able to pass, funding bills that go on for years, or the debate over the debt ceiling, for example, and not being able to reach resolution. So there's that broader sort of risk level. America, as we all know, is the most important economy in the world. And so having that certainty is really important for business leaders. And I think over the last few years, businesses have become increasingly frustrated that the government hasn't been able to provide more stability, and that partisanship is continuing to sort of really, make it difficult for business leaders to make decisions, especially businesses who rely upon the government for, a wide variety of factors. So it's a broader sort of risk appetite rather than just in this moment, but it's definitely something that boardrooms and businesses are starting to look at.
Our thanks to Rhett Buttle, CEO of Public-Private Strategies. That's this week's edition of Bloomberg Intelligence on Bloomberg Radio, providing in-depth research and data on 2,000 companies and 130 industries. And remember, you can access Bloomberg Intelligence via BI Go on the terminal. I'm Paul Sweeney. Stay with us. Today's top stories and global business headlines are coming up right now.